Nvidia stock is crashing by more than 15% this morning as a rival AI software from China threatens the spending of big tech on products from Nvidia, wiping hundreds of billions of dollars of wealth from retail investor accounts. But the big question remains, why is Nvidia stock crashing, and is this a buying opportunity? I'll address both of those questions in this video, so let's jump in. I quickly wanted to let everyone know about this great offer for my channel members at the investor tier. You can gain access to my spreadsheet containing my ratings on over discounted cash. Hit that join button. Reduction. Nvidia stock is down by over 15% on the back of this news. Nvidia stock has lost hundreds of billions of dollars of market capitalization in just one day. In fact, if you look at Nvidia's stock price performance over the last 5 days, it's fallen from a market cap around 3.6 trillion all the way down to a market cap of 2.95 trillion. Large numbers indeed, and it highlights the riskiness of investing in tech stocks like Nvidia.
And to his point, that was like the safest stock of all time, right? You buy anything in the tech sector, it felt like it went up, right? Buy anything of the Magnificent Seven, and it only goes up, right? I think investors just figured out what risk actually is when they put their money at risk in the market. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the video of the day. And of course, stick around to see how we rank this out of 10 and subscribe if you haven't done so already.
Of course, I'm disappointed in this development because I've had Nvidia stock rated as one of my top stocks to buy in 2025. In fact, I had it rated as a top stock to buy last year as well.
And so this is why Nvidia stock is crashing, and is it a buying opportunity, from the Parkev Tate Slovian channel. Now, I actually really like his videos, but I have a concern that he just brought up, and that's having that price target, right? He's talking about his price target on Nvidia between 145, 155. As of right now, this is pre-market, it's around 120, right? Yesterday, it was in the 145-ish range and got completely hammered down to 118.58 is what it looks like it closed at. And this is why it's really important, in my opinion, to not have price targets, right? If you anchor yourself to a price target, then you're more likely to make emotional decisions based on that price target. What do I mean by that? So, for example, if his price target was 145, right, and it was hitting that price target, does that mean he's going to sell? Does that mean he's going to revise his price target? Does that mean that his price target was right, or that his price target was wrong? Because it clearly got there far too fast if it was supposed to be for the end of the year. And now, with Nvidia at 118, does that mean, hey, this price target now makes sense? This price target now makes sense. It's now the aspirational price target that Nvidia can look to achieve. And if it ever does, again, we're in the same boat. Do we sell? Do we revise the price target? Or what happens if it goes the other direction, right? What happens if Nvidia continues to fall? Does he now say, you know what, my price target's 145. I'm going to continue to hold until it reaches 145, right? I think price targets really get a trader or an investor or anybody in the market to set their eyes on a target that they have absolutely no control over. Setting their eyes on this target, they have absolutely, it's not throwing darts, right? You can't develop the skill to make your stock go to that point, right? Throwing darts, you could go to the your local Irish pub and throw darts every single night of the week. And you're going to get better over time, right? Improving and honing in on that skill. But you can't throw your stock to your target. You're just either on board for the ride or you're sitting in cash, not on the stock. So I think setting price targets is a difficult way to make money. Whereas, and this is a good example in Nvidia, right? If your price target was 102 when it was down at 80, right? And then it just blew past 102. Are you happy that it blew past 102? Probably so. Did you sell out at 102 just because it hit that price target? I doubt it. Because you were probably emotionally connected to that stock moving up. So, in my opinion, if the trend is running, let the trend run. Let the trend run as hard and wide and fast as it can. And don't put an artificial cap on it. When you put that cap on the trend and say it has to stop here, I'm such a genius, my price target is right, and everybody else is stupid. Everybody else should be changing their price target to my price target because I'm a genius. I'm not saying he did that, but there are people who think that. There are people who say the stock should go to this price. And that's, in my opinion, the most dangerous word when it comes to the stock market. Should do something. You have no idea what it is going to do. And for you to tell the stock what it should do, it's one way to lose a buttload of money.
2025 is getting off to a rough start for Nvidia stock investors. But why is Nvidia stock down by so much today? Well, the semiconductor market is leading a broader sell-off in tech stocks after DeepSeek, which ignited a low-cost approach to developing AI models, and it reignited concerns that big US companies have poured too much money into developing artificial intelligence, since the Chinese firm appears to provide a comparable performance to Western chatbots at a fraction of the price. So if you haven't been following along, big tech companies like Microsoft, Alphabet, Meta Platforms, Amazon, etc., have been pouring tens of billions of dollars into developing their AI capabilities. That's partly what's fueling Nvidia's success up to this point, is these large tech companies are buying up everything Nvidia can produce. So this news threatens those purchases. That's why the stock price is down, because investors are making a connection, thinking to themselves, well, if this company from China can develop this technology at a fraction of the cost, can US tech companies mimic that result and thereby develop the similar technology at a fraction of the cost?
If they really are. I was watching one video yesterday, and this person was saying how it's unlikely. And now, granted, I have no idea, but their thought was it's unlikely that they actually could build these chatbots for, pennies on the dollar compared to what ChatGPT and others are costing. And I kind of agree with them on that. I can't imagine to get the same computing power, right? Imagine, right? You buy a secondhand used Dell that's 12 years old and it's really cheap, and then you go out and you go, buy the sweetest RTX 5090 Intel i9K 54,000 Radeon, just name all the fancy tech specs out there, right? I can't imagine you could take that old Dell and make it look like the most sweetest gaming computer of all time on your outputs, right? It just isn't going to have the horsepower. So I don't think that they're actually doing it for pennies on the dollar. They're probably exaggerating, right? Kind of like their Chinese GDP, that they just happen to exaggerate every single time that they release it because they don't want to look bad. But this has far-reaching effects, right? This has huge ripple effects because of this news announcement. But we don't actually know how good their product is.
And if they're developing it at a fraction of the cost, the large percentage of that cost goes to Nvidia. So that means that money that's going to Nvidia will not be as much. And so Nvidia's future cash flows are threatened. And if you remember, when I did my discounted cash flow valuation of Nvidia, part of the reason why investors are so attracted to Nvidia stock is because its free cash flows are expected to surge.
I disagree. I don't think people were attracted to Nvidia stock because its expected cash flows were going to surge. I think they were attracted to Nvidia stock because it was on a gangbuster run, right? Who gives any baloney? Who gives any baloney what their free cash flow is going to do if the price of the stock is going up? If the price of the stock is moving at a 45-degree angle, and let's just go from let's do January of 2024 to now, even with that giant sell-off, it's up 150%. At its high, it was up 200%. Okay? Who gives any balonies what the free cash flow is doing if the price is going up? Because, as you know, only price pays. Only price pays. So who cares about that? I think fundamentals, again, are just a reasoning, a justification, and almost an excuse to help you decide to buy something. Whereas at the end of the day, the only thing that matters is price going up or is price going down. Now, one thing I am concerned about in the market is the market breadth had peaked. And so I mentioned this in the last couple of live streams, is that market breadth had been getting higher and higher and higher. And you can see this inside of Outlier in the market breadth section. But it had gotten so high that over 75% of stocks had a buy signal. Now, when it reaches levels like that, the way that I like to trade it is as it continues to go up, I'm interested in buying. But once it turns around, right, it went from 73%, 74%, 75%, and now today, 70 back to 74%. So 73, 4, 5, and then back to 4. That to me is the top, right? I'm not saying it's going to be the top of the market. I'm not saying it's going to be a crash forever, right? But what I'm saying is when I look at market breadth, how many stocks are getting these buy signals? When that peaks over 75% and then starts coming back down, that tells me that everybody who was a buyer has already bought. And if everybody who's a buyer has already bought, what's left? People to be sellers, right? Those buyers to turn into sellers. So I think we are looking at a short-term top here in the market, which, I mean, let's be real here. We got really extended away from these moving averages, right? We got really extended away. We did create a new all-time high right here, and all-time highs are ultra bullish. But a move like this, bottom to top, a 5% move in the SPY, right? When it averages, 9 to 10% a year, a 5% move in 8 candles, it's a pretty hard move. It's a pretty aggressive move. Now, I went to all cash after this, right? In fact, it actually really recovered in the last few minutes of the trading day. Because when I was looking at it, it was around down here around the 595 area. It was around the 20 period moving average. And I mean, it picked up in the last 30 minutes of the day. One of my rules is when the market closes under the 20 period moving average, I get out, I get straight to cash, and I let the market figure out what it's going to do. And then I get back in once it closes back above the 10 period moving average. And you can see that the outlier trend template right here, the 10 period over the 20 period, price over the 50 period, all that's moving north, right? But it's those days where it gets really rocky that the way that I trade is I look at it and I say, you know what? This is extra risk that I'm not willing to take right now. I'm going to go to cash. So I went to cash yesterday, even though it did close above the 20 period moving average. And you know what? If it closes back over the 10 today, I'm looking to get back in, except for the fact that market breadth is pulling back. So I'm actually going to hold cash, right? I'm going to hold cash. This is what I call the master key. I would really recommend you looking into these things right here, right? So we do have a buy signal on the S&P 500. The market trend, the price trend is bullish as of right now. The market breadth peaked and is now getting bearish to me. And then I also look at the sector breadths, right? This combo is giving me crazy win rates. So I'd really recommend taking a look at that. But let's go back to Nvidia stock right here. I've seen a lot of people saying that buy the dip. Now, my rule is never buy dips. Never, ever, ever buy dips. In fact, I only put on 2 trades for January. One was HSBC and the other one was CNP. Now, CNP was going strong and it closed under the 10 period moving average, or it was about to close under the 10 period moving average. But on this day, this order block came on. So to me, that was a get out of the way kind of move. It did continue on and looks like it's going to continue on. So this is still a really strong trend, but I got out of it. HSBC, I just got out yesterday as well on this move up right here. And I got out because the market said, hey, I think I'm going to close under the 20 period. Ended up not, but that's why I got out, because I go only to cash. So for me, I'm up a little bit for the year. Let me go over here. I'll show you where my results are real quick. I'm up a little bit for the year. Let it load. Like I say, I've only put on 2 trades, but these are my returns for the year so far. 2 trades, 1.79% year to date, annualized 27%. Average win was 9. So win on HSBC of 9%, loss of 8% on CNP. So 50% win rate. But you know what? That win made up enough to make up for the loss, and that's how the game is played, right? Now, if you were holding Nvidia, you had 2 insurance policies to not be completely wrecked yesterday when it was down. How much was it down? 16%. You had 2 insurance policies. First insurance policy is position size. For me, I like to put at most 7% of my account at risk in any one trade. Okay. Additionally, that's position sizing. It's your first insurance policy. Second insurance policy is your stop loss on the chart. And that stop loss may have been at 140 and it got blown out, right? It may have been right there and it got blown out. And that sucks. But it does happen. That's why you never take a break. When your money's in the market, you don't go on vacation. Right? When your money's at risk, you don't go on vacation. You either get your money out of the market, go to cash so you can enjoy your vacation with your family, or you don't go on vacation. Okay. When your money is at risk, you don't go on vacation. So it closed down like this. And so even though you had both insurance policies there, you now have to make a decision. And there was a comment yesterday of somebody who was talking about how they didn't understand, the trend was up and it gets blown out like this. What am I supposed to do? Yeah, that is part of trading. And that's why you position size correctly. So even if you have a big move like this and it blows out your stop loss, it shouldn't blow out your whole account. Okay. It might hit you 7%, 10% or so, but you can come back from a 7 or 10% loss. But it's really hard to come back when, maybe you were in 0 DTE options and you just got completely wrecked and there's no chance, right? A lot of people are still trying to make that work, and that's a really hard strategy.
Over the next decade, rising from 46 billion in free cash flow in 2024. My model and my forecasts, which incorporate Wall Street analyst forecast, suggest that the company's free cash flow could rise in the next 5 years.
Well, I got a second. There was somebody who was in our live chat yesterday talking about how they were so ready to buy this dip right here, and I kept saying, don't rush to buy the dip. Let it figure out what it's going to be, because if you look at AMD, right, AMD has been destroyed of people trying to buy the dip every time. People have been losing money hand over fist in the advanced money destroyer. And then it came down here, and I was saying yesterday, if you really want to buy it at 120, why not wait until it finds its bottom and starts coming back up, the outlier trend template showing that it's going to be bullish, and then buy at 120? You're still paying the same cost, but you're avoiding all this mess down here, and then you're still getting in at the 120. Okay, that would be my recommendation. And if you're going to do the same on Nvidia, that would be my recommendation as well, is let it figure out what it's going to do and then start coming back up. And if 140 was the price that you want to get in, maybe that's the right time, right? Or maybe you're looking at this and you're like, you know what? Maybe 120 is such a great deal. Greatest deal of all time on Nvidia. Let it figure out what it's going, or figure out where it's going, and then get back at 120, not buying 120 on the way down. Okay. And this is the difference in a stock that maybe you don't want to own while it's going sideways and choppy versus a stock that you do want to own, right? Something that is going up beautifully hard, strong, and fast, right? Either one of these that I have been trading, going up beautifully hard, strong, and fast, right? Whereas this one has been trending sideways for 5 months now. October, November, December, January, right? Almost February. Yeah, that's pretty tough.
In 2029 to reach $451 billion, up from $46 billion. So a roughly 10x increase in Nvidia's free cash flow is expected over the next 5 years. But if Wall Street...
Again, who cares? Parkev, no offense, my bro, but free cash flow means nothing to me. Only price pays. If price is going up, let's do this. If price is going down, I'm not interested. And all the free cash flows you could ever come up with doesn't matter if the price is going down.
Feels that Nvidia's customers are going to reduce spending, this forecast in free cash flow growth could shrink. And if this forecasted free cash flow shrinks, then Nvidia's valuation also shrinks. And so that's the big risk. That's what has Nvidia stock crashing by more than 15% on the day of this announcement. And if you look at Nvidia's third quarter, which is its most recent quarter, if you look at its data center revenue compared to total revenue, now data center revenue for Nvidia is where it makes sales for artificial intelligence categories. So this is where Nvidia would be hurt as a result of this news. If indeed companies like Amazon and Microsoft and Alphabet reduce their spending in the data center segment, this is where Nvidia will be hurt. And it's a big part of Nvidia's business. $31 billion in data center revenue from a total of $35 billion. So it's almost 90% of the company's revenue. So the market is right to react this way to this kind of news because it threatens a large part of it.
Of course the market's right. The market is always right. Right? The question is, were you right in that trade. And Larry Hite, the first $1 billion hedge fund manager, he taught me this. There's 4 kinds of trades: good trades, bad trades, winning trades, and losing trades, right? You can have a good trade that's a losing trade because it just didn't work out, right? It just didn't work out, whatever. But you can have bad trades that are winning trades, which you don't want to have because that creates bad habits, bad tactics, bad trading strategies. What you want to have are good trades. And good trades can either be winners or losers. It doesn't matter. What matters is, are you following the trend? Do you have your risk size in place? Do you have your risk management in place? Do you know where you're going to get in and know where you're going to get out and why? But the most important thing of all is, can you follow that plan? I've seen a lot of people lately talk about how, oh, my stop loss just got hit. Should I follow it? Well, freaking yeah, that's the whole point. It's equivalent to having car insurance, and as soon as you get into a crash, right, you're driving your Tesla down the road, you smash in the back of somebody's Hyundai, and you're like, hold on, I got this car insurance policy in my glove box. I don't want this. Let's make it work. No, that's what it's for. It's specifically for that. So if you have a plan, if you have a stop loss, please follow it. That's the whole point
of NVIDIA's business, and a large part of where NVIDIA's business is forecast to grow over these next 5 years, over these next 10 years. So given this decline, NVIDIA stock is now trading at a forward price to earnings of 27, which signals to me that it's still undervalued. Additionally, if you look at my discounted cash flow valuation model, NVIDIA stock still looks relatively cheap compared to my intrinsic value per share calculation, which forecasts that NVIDIA's...
Again, your definition of undervalued clearly was somebody's definition of overvalued. Somebody's definition of overvalued. Doesn't matter, right? Your analyses, and this, I'm not talking directly to Park I'm talking to the audience out there. Your fundamental calculations have no impact on what the stock is going to do. The stock is going to do what the stock's going to do. You either ride along with it or get out of the way.
Free cash flows will grow significantly over the next decade and more, and the intrinsic value per share is around $300. I also did several scenarios of NVIDIA in this.
You just said the value per share is $300? So, oh man. So you're telling me that, the value is 150% higher than where it is right now. See, that's the problem with price targets, right? That's the problem with evaluating things like that is, hey, you know what? I'm only going to hold it. First off, I'm never going to lose because I did all my analyses. Huge fallacy there. I'm never going to lose because I did all my analyses. And I'm only going to sell out when it hits $300 a share. That is a huge losing recipe. Okay. It may take this. I don't know if it'll ever go to $300 a share. It may never go to $300 a share. So you're going to be like Warren Buffett and you're just going to hold on to it forever because you know better than the market. I don't know about that, my friend. I don't know about that at all.
This discounted cash flow, where its growth rate could be as low as 3% instead of the 5% in my base case longer term. And even in that scenario, its intrinsic value would be $270 per share.
So basically, it should be between 270 and 300. And if it's not, the stock is wrong. The stock is wrong. I mean, I did my analysis correctly. The stock is wrong. Please, just let price tell you which way it's going.
So what's my conclusion? Is NVIDIA stock a buy on this dip? Is this a buying opportunity?
It can be once you let the dip figure itself out. Just exactly like AMD. It can be, but what you're more risking right now is buying a falling knife. Let it find its bottom and come back up. I think we're far too soon. Where'd that go? I think we're far too soon to say, hey, you know what? Yeah, let's do this. Let's pull that trigger there. Let's buy. Let's buy right now. I think we're far too soon for that.
Well, I think it's too soon to come to the conclusion.
Hey, all right. I'm so stoked that he said that. That redeemed so much of this video.
That tech companies like Microsoft and Amazon and Alphabet are going to reduce their spending in these data centers optimized for AI because of this news from DeepSeek. My usual reaction to big moves in the market is that stock markets overreact, both on the upside and on the downside. And so this downside reaction, I think, is an overreaction to this news. But it does bring me to higher.
And that, I'm gonna have to save this because this is the second time this week I pulled it up here. Let me show you what I mean. Open image in new tab. This is how the stock market works, right? When he says overreactions, right? So I've got a stock that could really excel, excel, sell. Everybody's selling. Sell. This is madness. I can't take it anymore. Goodbye. Bye. Right? This is exactly how the stock market works. This is a trend. This is human nature that develops a trend. Okay. And no amount of fundamentals is going to override a trend like that.
Alert on Nvidia stock. I'm already paying close attention to Amazon, Microsoft, and all these companies that are spending money on data centers. And the recent news, if you remember, I covered with Microsoft, and they said they're increasing their capital expenditures to $80 billion in 2025, up from $50 billion in 2024. So they actually increased their CapEx budget by 60%. Similar story with Meta Platforms, similar story with Amazon, and we're going to get earnings releases in the next week where these large tech companies are going to announce their quarterly results. And of course, Wall Street analysts are going to ask this question to those big tech companies. They're going to ask this question to Microsoft, to Amazon, to Alphabet, and say, look, you guys are spending this much money to develop AI when this Chinese company did it at a fraction of the cost.
Claims they did at a fraction of the cost.
Explain yourselves. And that's when we'll get the really critical information to digest and to make a decision whether or not this is really going to impact NVIDIA, right? If Amazon and Microsoft and Alphabet all come out and say, look, yeah, that's great what they did over there, but they wouldn't have been able to do that without the initial investments. And they may have made great progress to start with, but they're going to get stuck because they don't have this technology. Whatever the reasoning might be, if those large tech companies say, we're not going to change our spending plans. We're going to continue developing. And even if they can develop this technology at a fraction of the cost, the offsetting factor might be huge as well. The offsetting factor could mean, if you think about this in the next step, the second derivative of this outcome, if you can develop this kind of AI technology at a lower cost, and these companies were already spending so much money on AI at the higher price, imagine how much they will want to spend on AI if they can develop AI at a lower price. Imagine all the extra.
So still same net dollars, but if they can do it for a lot cheaper, then what he's saying is that they would still spend the same net dollars, but they would have, infinitely more times production, infinitely more times productivity and efficiency.
Extra use cases that now become financially viable because the return on investment is so much better. And so you're going to have this initial reaction where there's fear that these large tech companies are going to decrease their budgets for AI. But then if you think about it, usually what happens with technology is a lower price to develop technology creates increasing demand for the technology. So now you can develop these capabilities at a lower price. And if you can develop these capabilities at a lower price, now your imagination starts to think more broadly and think more expansively, and you start to consider, man, I can do this now because the cost is lower. I can develop this new technology because the cost is lower and the return on investment makes sense. So the whole calculus will change, and it'll create more opportunities for new investment that now makes sense from a return on invested capital prospect. So I think it's too soon to make any kind of conclusive change in my recommendation. So I'm still reiterating that I still think Nvidia stock is a buy, but put an asterisk there to be more cautious because the big tech companies, Microsoft, Amazon, Alphabet, will be reporting over the next couple of weeks. And that's when we'll get definitive answers as to if they're going to change their spending plans as a result of this news.
You know what's great about the stock market is that everybody gets to express their own opinions through their purchases or their sales or their abstinence, right? Sitting on the sidelines. I view this because this trend template is going to turn south here, like today. When the market opens here soon, this trend template is going to show a bearish trend. I rate this as a do not buy. Do not buy yet. It could be a great opportunity. but we don't know where it's going to go just yet, especially on the first day of this move, right? I don't follow this, but I know I have heard other traders talking about, a 3-candle move, right? Wait at least 3 candles to see what's going to happen with this, right? I mean, absolutely could happen where you have this big down day and then 3 more significantly back up days. In fact, this reminds me of the SPY not all that long ago, right? It had crossed bearishly, had a big down day that reversed, and then within 1, 2, 3 candles, it was right back up being bullish again, right? So, I mean, if I were to do anything, I would definitely set out at least 3 days to see where this is going. But I also wouldn't be buying it until we've got that trend template pointing back up. But I also am going to be holding cash because the market breadth is starting to curl back in. Market breadth is starting to come back down. And that matters because 40% of the stock's move is based on the market itself. So if the market is pushing higher, then that's going to lift all the ships, right? And then the other another 30% of the stock's move is due to the sector. So if the sector is doing well, you've got 40% plus 30%, you've got 70% of basically the rest of the participants in the market help pushing it up. And the final 30% is the stock itself. So rather than trying to bet everything on the stock itself, I like to look at the market breadth as well as the market trend to figure out which direction are we going. Are we getting more buy signals, or have we got so many buy signals that we've now reached a peak and now all that's left are sell signals for a while, right? And the market breadth is ultra cyclical, right? It's super cyclical. Let me zoom out a little bit. I mean, basically 2 weeks in either direction, right? And if you are a long-term investor in Nvidia, like you claim you are, a lot of people out there claim to be long-term just because they're not winning. And if you're a long-term investor in Nvidia, sitting out a couple weeks is not going to hurt you. Sitting out a couple weeks while this does what it's going to do, right? And then starts going back up again, it's not going to hurt you. Yeah, you're not going to find the bottom. And just be okay with that. Nobody's going to get the very bottom price except Nancy Pelosi. Okay, just keep that in mind. So do me a favor in the chat, tell me what you're trading. I'd really love to know. But also, before we go, let's rank this video here from Parkev. I'm gonna give it a 5. I'm gonna give it a 5. I almost gave him a 6. Maybe I should give him a 6. I'll give him a 5.5. I have 5.5 on this one. Let me know what you would put down in the chat as well. But he's not going to get an impressive or epic or legendary for me, just because I feel like he didn't talk as much about price, right? It matters only so much what the fundamentals are saying, what your valuations are saying. No, I'm going to go back to a 5.0, because he really talked about how maybe a 4.5. Okay, I'm going to leave more 4.5 on this one. Because now that I'm thinking about it, he talked more about how his price targets are, between 270 and 300. His valuation targets are between 270 and 300. And that's fine and dandy and all, but that's not going to pay the bills, right? Your target is not going to pay the bills. Your target is not going to increase your trading account. And setting people on a path of creating their own targets, I think is a difficult path to come on. I mean, you can do whatever you want. You might be successful. You might come up with this amazing target and you work every single time, but more than likely, your targets are just something you can talk about, right? Just another justification, just another excuse as to why the stock should go up. And as I mentioned earlier, that is the absolute worst word when it comes to the market. But then again, I respect Parkev. He has a CFA. CFAs are incredibly difficult to get. I just wish he would talk more about the risk associated with it. And not the pie in the sky $300 a share dreams. So tell me what you're trading in the chat. And of course, come back tomorrow, or I'll help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a recommended video right now, and I would recommend you click one of them. Have a fantastic day, and we'll talk soon.